an SFA, which is a strategic financial analysis, which is a way to break down our wealth and really determine how we're doing on the financial freedom formula. So this is an actual spreadsheet that we have here in the community. And what this does, I know this probably looks overwhelming to some of you. First time you see it, I know that it is, but you can see here in this column C where it says from FS, that means from your personal financial statement. So those green squares over here where the numbers are where you input the numbers. So for this example, this person, I'm sorry, I didn't scroll all the way up. This person has a net worth last period. We do this a couple of times a year. And just for example purposes, the person last period under column E had a $5 million net worth. And what this does, guys, is this allows us from period to period to see our progress. Because you'd be amazed, and I can speak from experience, when you don't have a tool like this, you'll be amazed at how quickly time goes by and how we lose track of these numbers. So for this particular individual, he had last period 6 months ago, $5 million net worth. He had half of that, $2.5 million, was out there producing income, okay? And it says it automatically figures that it's 50%. And it also automatically figures how much he's getting, how much his net worth is producing for passive residual income. You manually put in what you're making on your high-paying W-2 or your job or your businesses. But this would be a collection of all of those, and then it talks about the different other types of income. So these are your incomes here. One is active, that's you participating 30, 40, 20 hours a week. This is passive from selling a property. Selling a property is a perfect example. I sold a property, I bought it for 300, I sold it for 500. My passive income from that, I didn't do anything other than just sell it. I do have to have some skills, but I made 200 grand in my example. Passive residual income, that is going to be money that comes in regularly without me having to work more than 20 hours per month to produce it. Now, we're all going to have our threshold. I actually use 10 hours a month now, 2 hours a week. If I'm more than that, it's not truly passive to me. But in this person's example, they've got $50,000 coming in from that $2.5 million, which is not great, but it's a number. And then automatically down here on the bottom, we are figuring our expenses. And this person lives on $300,000 per year. How do they know that? Because they sat down and the number one, personal financial statement is the easiest way to track all your expenses. Go through credit card statements and figure out, as well as bank statements, and figure out what your exact cost to live is. Now, in this example, this is a business owner. So this business owner goes into his business books and realizes that if he didn't own that business, let's say he sold that business, didn't own it anymore. He's got fuel in there. He's got a cell phone in there. He's got a portion of his electricity bill because of a home office deduction. He's putting his suits in there for uniform. He's got 75 grand per year that his business is providing for him, and he's realistic in understanding that 75K is not going to be covered by his business. So his real living expenses, if he stays at that same level, is $375. So down here, what this goes through is the PRI, or passive residual income, divided by net worth is 1. And his financial freedom number, this 13.3%, is this 50 grand that he's making divided by this 375 that he needs. He is 13.3% of the way to financial freedom from having income come in on a monthly basis that he does not need to work for. So what this tool does now, you can see that in this period, he's raised those numbers. His net worth is raised, but not only that, he's got 85,500 in the last 6 months. He's up to 35, and now he's at 21.6% of his financial freedom number. So what he's doing, if you guys are following me here, is he's increasing that incrementally because he's setting goals for it. He's actively looking for a place to safely park that money that produces him income. on a regular basis that he doesn't have to work for. And once that number is 130%, the 30% would be to cover taxes. He doesn't have to work for anybody anymore. He can sell that business if he decides to do that, or own it passively, step out of it more. Or in some people's cases, they can quit that W-2 job. This is a way to determine how you're doing on your producing passive income without you working. And I know this is really advanced for some of you, but for others, you totally get it. Like, this tool is really a godsend because it helps me track where I'm going and what I'm doing with our wealth. I will also say it also has a nice little feature down here that we all should have anyways, but so there's just a basic plain Jane version of the assets and how I'm coming up with that net worth on my personal financial statement. Because in case you don't know this, you're always going to have assumptions, what the fair market value is of something, what the multiple is of your company. That's all things that you need to come up with. And the assumption is not as important, as long as it's realistic, as the fact that you continuously use the same assumption. In other words, here on line 5, he's basing this on a 4 to 5 times EBITDA, earnings before interest, taxes, depreciation, and amortization. We don't want to change that. We want to continue to use it unless I add enough locations, enough volume to where now it's justified to bring that to an 8 multiple. But I want to remind myself, believe me, when you're doing this every 6 months, you won't remember the assumptions that you used. So you definitely want to jot down your assumptions on your asset list, and then you can track how you're doing. You can see in this example, he's doing it every 6 months, and he's ready to go for 2020 in my example here, to just track your progress. And sometimes when real estate prices take a hit, you may see your net worth decline. I've seen that on many PFFs. Okay, so not uncommon, but this is just a tool to track your wealth. It's called the Strategic Financial Assessment. So regardless of what tool that you use, for those of you that are already members of the community, this tool is available to you. It's on the website. You can download it for yourself. I will help you. We can hop on a call. I will help you get this filled out, and so that you can, as well as do some goal setting. I think this is an important part of the wealth pillar, is not just, as you'll read in the Psychology of Money, earning it is one small portion. Continuing to grow it and keeping it, not losing it, is just as important as growing it. So regardless of where you're at in your walk, whether you're growing it, whether you're looking to maintain it, or whether you're looking to even achieve it, this is a great tool.